And now Moody's Investor Service has affirmed the African Development Bank's AAA credit rating with a stable outlook. Moody's Investor Service said in an annual credit analysis that the credit profile of African Development Bank is supported by the bank's robust capital buffers and superior risk management, which mitigate risks. Details of this and other stories in our Africa Business Roundup.
Moody's added that the bank's ample liquidity buffer and unfettered access to the international capital markets also supports its ability to meet its debt service obligations. The bank has a long track record of being the premier development institution in Africa and benefits from shareholders' ability and willingness to support its development objectives, exemplified by the significant contributions of highly rated non-regional member countries. The AAA rating from Moody's follow earlier affirmations of the AAA rating of the bank, with a stable outlook by other leading rating agencies, namely Fitch Ratings, Standard & Poor's Global Ratings, and a Japan Credit Rating Agency. Meanwhile, the Southern African Development Community has launched a $20 million regional appeal for support to control the outbreak of the devastating African migratory locust in the region. The appeal follows the continuous threat posed by the locusts that have invaded the region since the beginning of the year. The first outbreak was reported in February and affected Botswana, Eswatini, Malawi, Mozambique, Namibia, South Africa, Tanzania, and Zambia. At the time, the affected member states were able to control the swarms. However, there was a resurgence of the locust in May 2020, which affected Angola, Botswana, Namibia, Zambia, and Zimbabwe. The funds will cater for emergency locust response and preparedness, building emergency regional response capacity, risk communication and recovery, and resilience building of affected communities. They will also be used for cross-border protocols. And the Organization for Economic Cooperation and Development and the United Nations Development Programme have launched a plan to help public and private sectors identify and prioritize investments contributing to the sustainable development goals in the continent. The OECD UNDP framework for SDG-aligned finance presented at the Paris Peace Forum identifies solutions to shift the trillions of dollars available internationally towards a more sustainable and resilient investments and to further mobilize investment, especially to least developed countries, small islands, developing states, and developing countries. With an expected $700 billion drop in external finance to developing countries this year, the financing needed to meet the global goals is at risk of collapse, threatening decades of progress on poverty alleviation and sustainable development. But trillions of dollars available in the financial system could be better aligned with SDGs to curb this trend.